771 words within target range. Here's the script. There's a tax rule called the stepped-up basis that lets a family erase a $2 million capital gains tax bill the moment someone dies, completely legally. And your accountant's careful silence, your bank's fine print, and your high school economics class all conspire to make sure you never hear about it. By the end of this, you'll know exactly how a single word on an IRS form makes decades of profit disappear, and why the timing of death is, quietly, the most powerful tax move in America. Here's the part nobody explains. If you buy a stock, a rental property, or a business for $100,000 and it grows to $1 million, you owe capital gains tax on that $900,000 gain the moment you sell. That's the deal for regular people. Work, save, invest, get taxed on the growth. Most families accept this as just how money works, because nobody ever tells them there's a second set of rules that don't kick in while you're alive, but the instant you die. That second set of rules is the stepped-up basis. Basis just means the original price the IRS uses to calculate your gain, what you paid for something. Normally, that number follows the asset forever. But when you inherit an asset instead of buying it, the IRS resets the basis to whatever the asset is worth on the day the original owner died. Not what they paid, what it's worth now. Every dollar of growth that happened during that person's entire lifetime simply vanishes from the tax record. Gone. Not deferred, not reduced, erased. Here's the worked example. Say your grandfather bought a rental property in 1985 for $80,000. By the time he passes away in 2026, it's worth $2 million. If he'd sold it the week before he died, he'd owe capital gains tax on roughly $1.9 million in profit, call it $350,000 to the IRS. But he doesn't sell. He holds it until death and you inherit it. Your new basis isn't $80,000. It's $2 million, the value on the day he died. If you turn around and sell it next month for $2 million, your taxable gain is zero. Not lower, zero. But here's where it gets interesting. The family didn't even need to sell to benefit. They could have borrowed against that property for years while he was alive, using something called a securities-based or asset-based line of credit, spending the growth completely tax-free, and let the stepped-up basis erase the bill entirely when he died. Buy the asset, borrow against it, die, the debt gets settled, the gain disappears. This is exactly why wealthy families almost never sell their big appreciated assets. Financial advisors, estate attorneys, and private banks build entire strategies around this one rule, quietly, because recommending it out loud sounds distasteful. Nobody wants to say, "Hold this until you die," to a client's face. So it lives in trust documents and estate plans instead, discussed in offices most people never walk into. It isn't taught in school, it isn't mentioned by your bank teller, and most financial advisors who work with ordinary savers never bring it up, because their clients don't have appreciated assets large enough for it to matter yet. And here's the caveat that makes this fair game for you too, not just the ultra-wealthy. This isn't some offshore loophole or gray area maneuver. It's written directly into the tax code, applies to a paid-off house, a small rental, even a modest stock portfolio, and it works the exact same way whether the estate is worth $200,000 or $200 million. The catch is patience. It only pays off through inheritance, not a quick sale, and estate planning has to be done correctly ahead of time, or the benefit gets missed entirely. So think about that $2 million number again, the one from the opening, the one that just vanished into thin air on paper. That's not a trick for billionaires with island accounts. That's a rule sitting inside every American family's estate plan, waiting to be used or wasted depending on whether anyone told you it existed. And once you understand that death resets the tax clock, you start to see why the truly wealthy build their entire lives around never selling, because there's a related move, one that lets them spend that unsold wealth for decades before that clock ever needs to reset. That's the next file.